The purpose of this video is to answer a question I've been getting commonly with all of these COVID forbearance plans going on, and that question is, what's happening to my credit score? And the answer is, it's different depending on who your lender is, and things right now are being applied kind of inconsistently. So what's important to understand is, when you make your mortgage payment every month, right, you have a regular current payment history. And every month, the people that you owe money to, like your mortgage lender, reports that you have made an on-time payment. Okay, if you miss a mortgage payment and you don't make it up within your grace period, the lender will then start reporting to the credit reporting agencies that you are delinquent or in default or have missed a payment. Once you start having these missed payments being reported, that will impact your credit score. It will show up and it will drop your credit score. And so if you're just somebody who was paying and then you stopped paying, you're in default at that point, and you are receiving regular monthly reporting from your mortgage lender to the credit companies, and that's why your credit score is dropping. Now, if you are somebody who has undertaken one of these COVID forbearance plans, your forbearance plan may or may not cause you to go into delinquent reporting on your credit report. Most of the homeowners that I'm seeing that I've actually been able to explore with the lender on the phone, they're not being reported as delinquent on payments. The forbearance plan is in place and it's kind of protecting them from that delinquent reporting. I have come across one lender that has actually reported some homeowners delinquent, and we're kind of currently working to see what we can do to get that cleaned up. A forbearance plan is an agreement, right, that you make with your lender where the lender says you don't have to pay me for a certain amount of time. And so they should not technically be reporting that as delinquent payments because you're in agreement. Now, what's interesting to understand is there's going to be a transition period. So at some point, your COVID forbearance is going to expire. And then you're going to apply for either a loan modification or a deferment or a partial claim to kind of get back current. If you have questions about that transitioning process, there's tons of videos on this page about that. But you're going to go from being on your COVID forbearance plan to applying for something else. If there's a couple months window in there where you don't have a valid forbearance in place anymore and your loan modification or whatever you're applying for is being reviewed, you technically could start to be reported as delinquent on the payments at that point. And there's nothing really you can do about that. You would technically be in default. It seems that lenders are being a little bit more lenient with all this COVID stuff, and they're not jumping to report as quickly as possible. But if you're super concerned that you're going to have this lag time in between your COVID forbearance and your loan modification, and that you don't want to be delinquently reported, what you should do is try to be as conscious as possible as to when you're going to actually apply for your loan modification. So let's say you're 45 days away from knowing that your COVID forbearance plan is going to expire and your income has recovered and you're ready to apply for, let's say, a loan modification. You should start that application process 45 days ahead of when your COVID forbearance plan expires. The perfect situation would be to be able to transition off of your COVID forbearance plan and into your new plan while creating very little time delay in between. Now, unfortunately, you can't really control a ton of that. The review times are kind of on the lender's review time right now. There are some things you can do to speed it up, and I talk about them in other videos, so watch my loan modification videos. But if you're super concerned about getting reported as delinquent on your payments, you should apply to transition earlier rather than later. If you know you'll be able to make your modified payments, even if you plan on staying in your COVID forbearance, try to hit that 45-day time frame where you apply for the transition plan before your COVID forbearance expires, and that should help with some of the delinquent reporting. Good luck.